Hello everyone, welcome to The Marketplace. Coming up this afternoon, Ghana's bilateral creditors shared draft MOU with members as an agreement is set to be finalized in the coming days to pave way for release of $360 million of IMF cash.
The indication we have is that the OCC has shared the draft MOU with their members, and they are about sharing the draft with us sooner than later.
Also coming up, First Solutions forecast an end-year Cedi to dollar rate of 12 cedis 25 pesos, despite challenges facing the local currency. Plus, interest rates on 91-day and 364-day bills declined as government records marginal undersubscription of T-bills. My name is Daryl. Kwawu. Thanks for being with us. Details coming up. And thanks for staying with us, everyone. First up, Finance Minister Dr. Mohamed Amin Adam has revealed that the country's bilateral creditors have shared a draft memorandum of understanding on final terms for restructuring Ghana's debts. The development could now pave way for the IMF board to disburse some $360 million to Ghana in June. The Finance Minister gave more details at a press conference in Washington, D.C.
I have to tell you that I'm very optimistic that we will reach a very durable agreement that will help reset our debt profile. As far as the bilateral creditors are concerned, you know that we reached an agreement in principle in January, but we had to now formalize the agreement through an MOU with our bilateral creditors as a group, what we call the OCC. And the indication we have is that the OCC has shared the draft MOU with their members, and they are about sharing the draft with us sooner than later. And so as soon as we get the draft and we are fine with it, that will mean we have an agreement on the MOU. The IMF is not asking for a deal with the bilateral creditors, but an agreement on the wording of the MOU, and that will be sufficient for the IMF to go to the board, because that would have signaled the financing assurances that we need from the OCC members. The issue in relation to Eurobonds is also on course. We, as you know, from the cleansing statement we issued at the end of our non-disclosure agreement, we reached an interim agreement which we had to subject to the IMF threshold. And when you subjected that to the IMF threshold, you will notice that we narrowed the gap between what we agreed in the interim with the bondholders and the IMF threshold. We narrowed the gap, very, very slight difference. But that means that there is more work to be done, because any deal that we reach will have to be consistent with the threshold, the DSA threshold of 55% debt to GDP in present value terms, and then also a debt service to revenue ratio of about 18%.
The finance minister addressing a press conference yesterday, the IMF Ghana mission chief, Stefan Hude, also was at the press conference where he expressed confidence that Ghana will, in the coming weeks, finalize an agreement with the bilateral creditors on restructuring of our debts. There are concerns that it cannot be done in time before Ghana's board meeting in June, but at that press conference, Dr. Hude was confident the agreement will be finalized in good time. I want to bring in Courage Buti, who is the lead at GCP Capital. Thank you so much for joining us, Courage. First, I want you to, by way of education, tell us where we are right now in terms of negotiations. We are told that the bilateral creditors have shared a draft MOU with Ghana. What does this mean in our walk towards reaching a deal with the bilateral creditors?
We still have that. Courage has started.
Good afternoon to you and your listeners. Good progress, I must say. It looks like the official creditor side of the conversation has not really been too much of a difficulty. I think relative to what we've seen examples of other countries going through the common framework, Ghana's process with the official creditors has been one of the smoothest, if not the smoothest of all. And it appears we are getting there where the MOU should be in place. I hear even the minister talk about as early as next month, ahead of the June meeting of the IMF board, which would most likely rubber stamp this, and then the next tranche of disbursement will come. What it also means is that the program is on track, and it means that our performance, at least on the quantitative and structural reforms and all that, is broadly on track, and it's the reason that these creditors will be more or less trying to play ball with you, or maybe try to cooperate with you to get the restoration efforts maybe done as soon as possible. I think the outstanding issue, which I've heard a quote attributed to, I think the IMF African region director, also someone like that, I mean, mentioning that it appears even the Eurobond holders is a matter of time, and that he doesn't think there is anything fundamentally holding back an agreement, and that it would have to depend on how much time government dedicates to those negotiations between now and maybe in the next few coming weeks to try to get a deal. So broadly, we're on track, and there is a target, 55% of 55% debt to GDP ratio in present value terms by 2028. And so whatever agreement we strike, whatever MOUs we sign, should broadly prove that we are on course towards achieving that. And that seemed to be the reason behind the delays we're seeing on the Eurobond side. So ultimately, it will come together, and it will be relevant for Ghana in many ways when the agreements are reached, because some disbursement tied to some of the benchmarks under the program would ensure that funds conditions are triggered for funds to be released. I think the commercial market for even the secondary bonds market in Ghana and all that will be taking a cue from what happens with this debt restructuring. If we are over and done with sentiment fairly balanced, and there are no immediate concerns, and we see the half-year review also showed that fiscal projections are broadly on track, probably we could begin to see some activity on the secondary bonds market trickling, and that may be the beginning of a revival. And so good progress so far, and we can only hope that it's completed in good time for the next disbursement to come. And the important thing is not even the money, it's about the signal it sends to the market that the program is on track, and all the negative sentiments may be easing to a large extent, and that will set the pace for recovery to even be accelerated.
All right, so there's this matter that has come up that I want to pick your thoughts on, concerns that the international framework for debt negotiations has not been favorable to Ghana. And so I want to quote something that Ben Boache of ASEP said. Says that there have been criticisms that the G20 common framework put forward by developed countries and the IMF or World Bank has not moved that fast to deal with the current debt crisis. Some arguing that the lack of commitment on the part of these countries has delayed efforts in securing a debt deal from creditors. Ben Boache, doesn't agree with that. Your thoughts?
Well, you see, these are people's money. They lent it to you with the expectation of getting it back. If you have to restructure it through negotiations, you don't expect they would yield immediately. They are not in business because they love Ghana, right? They're lending because of their interest expectations. Look at the domestic debt exchange, for instance. And I think that the government more or less hastened that process and in quotes, maybe force everybody to play. But even that, look at how long it took, right? The deal was, the restructuring was announced sometime in December. And the hope was to complete at what time, and look at when we eventually completed the first set and when eventually it was completed. It ran the course of over 7-8 months, and that was even when, in quote, we practically compelled everybody to participate. And so for these ones that go through proper negotiations and government doesn't have the leverage to force their way through that way, and they have to be proper consensus on the deal, it will definitely take time. But what are the examples? We've seen Zambia go through, and they've been doing this for almost 3 years now. They are yet to even decisively conclude debt restructuring, right? And there are a few other countries in that process. So if you look at where we are relative to what the others are, yes, one will admit the process hasn't been very smooth and there are delays, but these are people's money and they would have to agree what you do with them. And so if it will take time to negotiate properly and achieve a deal that works, that helps in restoring debt sustainability, and everybody is at peace, I think it's better than rushing it through and then not achieving the right result. So anyone would have wished it ended quicker than we are seeing, but it's better slow than not get a deal at all, in my view.
Concerning a deal with our international bondholders, you say it's just a matter of time before a deal is reached?
Well, I mean, that is what insiders to the story or the development are saying, and I have no reason to doubt that. Remember, we are not privy to the hardcore negotiations going on. What we've been told is what we know, and from the minister himself, the standoff is really just a matter of not meeting the requirements under the program, and they would have to have those goodwill conversations again. And it looks like there is that shared commitment to restore debt sustainability or help Ghana regain debt sustainability or restore debt sustainability, really. So have no reason to doubt that the progress is continuing. And we've seen independent, credible views on this, including the IMF, trying to say that it's a matter of time. And the categorical statement he made was that it's more about Ghana dedicating time to it in the next few weeks or so, rather than something fundamental holding it back. So I get that general consensus around the table that they are happy to make a deal. And so we have to look at the next few weeks. Remember, the Eurobond is where the meat is 13 billion in total. This one that is getting to a close is about 5.4 billion. So the chunk of it is in the Eurobond, and it will take time. Investors, and these are commercial creditors who are profit oriented, they would have to take time to reach a deal that first suits their investors as well and their stakeholders, and not just see to something in the interest of Ghana, but it has to benefit all parties. And I think it will take a bit of time, but as there is that general commitment to see it through, we expect that in the coming days there will be a positive announcement to that effect.
Concerning the outlook for the economy, the IMF mission chief, Stefan Ode, is quoted as saying the worst is over for Ghana's economy. You agree?
Well, I think so. You look at many of the indicators, where debt was, where inflation was, what the rate of depreciation of exchange rate was in 2022, 2023, the precarious nature of reserve. I mean, in fact, under 1 month of import cover at some point. And where they are now, these are sharp corrections we've seen over the period. I do admit that there are vulnerabilities. These are fragile recovery underway. Growth is still 2.9% in 2023, way below trend. And the expectation is not to get back to trend or above trend even in the next 1 or 2 years, really. So there are still a lot of work to be done. And that effort needs to be sustained. The fiscal side of the account, last year alone, 4% of GDP in fiscal adjustment. which is commendable. Are we able to sustain that trend through 2024 and into 2025, 2026, and even that program? Those are the bigger questions. And it is when we do those things that we can entrench the gains we're making, in addition to the structural reforms we're doing, and then get macro stability back to a sound footing. So I do admit that there is progress, and I think looking at just the numbers alone, the worst seem to be behind us, but it will require a lot more effort to entrench these gains. In fact, first of all, bring it to the levels we want and then entrench it.
All right. I want us to quickly talk about the Cedi because Fitch Solutions is projecting as an end-of-year rate Cedi to dollar of 12 cedis 25 pesos. What's the outlook at your end?
Well, I would want to play conservative here. My end-year forecast is, I think, 13.6. I've seen correction on the market in the last 2 or so weeks. Now, general stability around maybe current levels. I don't see the triggers for a sharp correction to the 12 region. Yes, there are flows expected along the year. Cocoa syndication potentially. We've seen the delays last year, but potentially we could get a deal sometime before the 2024-25 crop season starts. There is the expectation of 360 million somewhere in June once the IMF board approves the program. I think later down the year, November, there is another review. There are in between flows that are expected from the World Bank and the African Development Bank, which will all support the reserve accumulation. Plus, the Bank of Ghana is doing their best to accumulate reserve through the gold for reserve policy. So I think there is some support to try to strengthen our external position, and that will bode well for the CDN. So I'm tilted more towards a relative stability, in fact, a firmer rate of or more pronounced stability in the second half of the year, as opposed to a correction where we could be getting into the 12 region. And remember, you need to sustain sentiment on the market as well. If you are bringing, if you are forcing exchange rate down, what would the market's response be and all that, and how sustainable will it be going forward, given our objective of building back the reserves? So I think there is a balancing act that need to be there, and I don't expect there will be as much correction to the extent that it will bring it back to the 12 region. At best, stability around current levels.
All right, Kari Djibouti, thank you so much for your insights this afternoon. I appreciate it. Now, interest rates on the 91-day and 364-day bills went down on the yield curve as the government recorded a marginal undersubscription of Treasury bills auction. That's according to auction results from the Bank of Ghana. Joining me is Patrick Edemagama, who is head of trading at Republic Securities, to talk a bit more about the auction last Friday. And Patrick, interest rates on the decline, government once again recording an undersubscription. How did the auction go last Friday?
Well, Daryl, on the money market, we noticed that the government raised a total of 3.341 billion Ghana cedis, accepting all the bids against a target of 3.37 billion, which is more like about 1% under subscription. But this was enough to pay the maturing obligations of 3.16 billion Ghana cedis, which is about 5% more than the maturing obligations. We noticed that the 91-day cleared at an interest rate of 25.65, which is just about 9 basis points deep from that of last week. We noticed there was also a drop in the 1-2 day that cleared at 27.9%, decreasing by 24.91 basis points. And also the 364-day cleared at 28.5%, decreasing by 25.26 basis points. Again, these rates are in line with the pricing guidance, and it's also showing the level of control of these auctions.
How are investors reacting to the Cedi depreciation and what's happening with our external debt restructuring? How is that driving sentiment on the markets?
Well, for now, we are still seeing a lot of confidence in the Treasury bill, and on the money market, we still see a lot of confidence coming. Even if you look at the secondary market trades, we are still seeing the numbers in some of these securities. So I would say there's still confidence, although we know the ripple effect of the cash reserve ratio that happened with the banks. We are still feeling that ripple effect, but there's still a lot of confidence on the retail market.
On the stock market, we are expecting MTN Ghana's shares to go up, the price of the shares to go up. Apparently, there's some huge demand. What's going on there?
Well, on the stock market, we noticed last week we saw MTN dominated both trade volumes and values by 99.6% and 98.6% respectively. There's still a lot of demand, and this demand is coming from some of those investors that waited and expect the share price to fall after dividend is paid. Also, we can also attribute it to those that have been paid dividend and they want to plow back their dividend into the stock. We know that's actually getting a lot of investors interested in MTN. There's also a possibility that MTN can pay interim dividend as they do every year. So that interest is still there from the investing public. We are also seeing equities like GCB and Unilever and also ETI seeing a lot of demand on the market. There's still a high demand for some of these equities on the market. At the flip side, we can see there's the supply of stocks like EGL and CarBank. You know, we are still in the final week of CarBank rights issue, but some investors are willing to sell at the current market price of 39 pesos. So yeah, we still see the offer side actually building up for some of these equities.
What else are we watching on the market this week?
On the money market, we expect government to target an amount of 3.478 billion to retire short-term maturities of about 3.27 billion. And we expect the same trend where it will be slightly a decrease from the one we saw this week.
All right, Patrick Edem Agama, he is head of Trading Republic Securities. Good to see you, Patrick. We'll talk same time next week. You're watching the marketplace now. Rising energy costs have driven up business expenses, leading to operational difficulties for many companies. Despite this, President of the Institute of Certified Business Analysts and Consultants, Dr. Richard Asase, remains confident that business analysts can devise effective strategies to help businesses stay afloat. He spoke with Joy Business at the Institute's induction ceremony for new and doctoral members in Accra.
Ghanaian businesses grapple with power outages commonly known as doomsor. These disruptions caused by unpaid utility bills, deteriorating infrastructure, and an ailing economy pose a threat of widespread blackout. Despite these energy challenges, the president of the Institute of Certified Business Analysts and Consultants, Dr. Richard Asase, encouraged business owners to work with consultants to develop strategies to help them withstand these disruptions.
All over, we know that businesses are facing a lot of challenges, especially in our country. Even currently, you see that there are certain electricity issues that are also affecting the flow of business and also the supply chain. So, it is actually a challenge that when it happens, we expect that business analysts will analyze the business entirely and find a way, find strategies, propose strategies for businesses in this current trend. These current challenges that we are having as a country. Even though the challenges are there, they should be able to propose some strategies that the businesses can move on despite the challenges.
At the recent ICBAC induction ceremony, Ernest Asamoah was recognized as the best graduating student, while Franklin Opon Amankwa received the award for best doctoral fellow. Both shared their plans for the future with Joy Business.
The knowledge which I have acquired so far, we can assure with my team working in Cedi District Akontomra Rice Factory, 2-3 years to come, as the government is trying to put import restrictions on rice and so on and so forth, will be part of that success story because the knowledge is being put to use.
The trainer have realized that once we collaborate with industry or collaborate with companies, We identify the real challenges, and when we see or we profess the actual solutions and we assist them to implement, there is no way businesses will fail, but rather business can grow and compete in whichever environment, no matter the dynamic nature of the environment.
The 2023-2024 ICBAC induction ceremony welcomed new members and doctoral fellows into the organization. The Institute of Certified Business Analysts and Consultants is dedicated to ensuring ongoing business success through the application of practical business knowledge.
Well, it's time to bring you your money tip on Money Lab.
Hello there, welcome to Money Lab. My name is Ransod Matekole, Head of New Business Advisory at Enterprise Trustees. On our previous episode, we discussed retirement. Today, we'll be talking about retirement planning. Retirement planning is preparing today for your future life so that you continue to meet all your goals and dreams independently. Retirement planning is important because at retirement, you experience a reduction in your income and an increase in expenditure, i.e. health and basic needs. Your financial choices during your working years will greatly impact your income during your retirement. Here are some helpful tips to help you in your planning for a comfortable retirement. The best time to start is now. It's never too late or too early to start. Start by identifying your sources of income, such as your Tier 2 and your Tier 3 lump sum benefit. Implement a savings program that is to compare your income with your estimated expenditure, and then plan your investment and projected income to meet your expenses by investing more and implementing a lifestyle change to reduce costs. Till we come your way again on our next episode of Money Lab, please remember to plan well and retire well.
All right, and that's our program this afternoon. You can catch up on all the stories we have been reporting this afternoon on our website, myjoyonline.com/business. Bilateral creditors shared draft MOU agreement on Ghana's debt restructuring for consideration, according to Amin Adam. Also, the West is over for Ghana's economy, according to IMF Mission Chief to Ghana, Stefan Hode. myjoyonline.com/business. My name is Daryl. Thanks for watching. We will be back same time tomorrow.